Ajay had a chat with Luke Brown. He's a senior portfolio manager and head of asset allocation, multi-asset solutions team. Let's listen in to what he has to say about India and how it's stacking up across the globe.
Yeah, look, this is certainly something that's dominating our investment decision making and calls discussing, as you say, the state of the global financial services economy, the banking sector in particular. So if we look at what's transpired over the past couple of weeks with the demise of SVB and then the contagion across to impact Credit Suisse in particular, and the extraordinary activity and intervention from the Swiss authorities to create the takeover of Credit Suisse by UBS. And you used a word which I think is exactly right, which is fragility. And I think what's driving things at the moment is sentiment, and that sentiment is fragile. Now, from a fundamental point of view, and just looking at the health of the banks and the balance sheets, we believe that the fundamentals are actually constructive. Now, what's critical here is that you need to weigh the immediate price action and pressure from the sentiment versus the longer term fundamentals. But our outlook, I think, is more constructive. We're obviously watching closely to see if there's any contagion. Deutsche Bank has obviously been in the news a lot with their credit spreads widening, their share price falling, but the German government has come out to reassure investors and depositors with Deutsche Bank that the company is in good financial health. So whilst I do think, as I say, we need to continue to watch carefully, the fundamentals remain pretty robust for the banking sector.
Luke, Goldman Sachs yesterday said that the probability of US slipping into a recession is rising and now is over 35% versus 20-something in Jan. What are you reading of the probabilities of US recession? And if yes, how deep or how shallow could it be?
Yeah, look, clearly the market expectation of a US recession has been increasing, certainly over the past few weeks. And that's for a couple of reasons. Obviously, what's happened in the banking sector and SBV has been a catalyst for that. Also, the action of the Fed, where they've increased rates by another 25 basis points, but I think more critically have identified that these strains that have been precipitating in the banking sector are also constrictive for the economy, and the impact they estimate is something like an additional 25 basis points of monetary tightening. So when you put all those things together, the Fed is continuing on their path of demand destruction. They must and they will pursue controlling inflation. So therefore, the likelihood of a US recession has increased. Now, would I put a specific percentage on it? Whether it's between 25 and 50 is probably the right answer. But I think what we need to look to is what actually happens over the next 3 months and then the 6 months beyond that. So the next 3 months, I think what we're looking for is to see moderation in some of the data points that the Fed are looking at. That would give us comfort, I think, that their policy of increasing rates, monetary tightening and fiscal tightening is having the desired effect, because on a forward-looking basis, the 6 months beyond that, that might then allow them to moderate the restrictive policy stance that they've had at the moment, thereby avoiding a deep recession. So our base case is, yes, the probability is increased, but at the moment, our outlook is that if there is a recession, it is likely to be shallow, and the Fed will have ammunition to loosen financial conditions, thereby limiting the damage from a short and relatively shallow recession.
Luke, what are you making of the odds of rate trajectory, rate hikes from here on? Do you think now there could be a prolonged pause, second half of the year, perhaps a cut, or maybe first half of next year? What are your thoughts then? What is the street pricing in?
Yeah, look, so I think that central banks globally are coming to the end of the tightening cycle. The ECB obviously moved 50, the Bank of England 25, the Fed 25, and other central banks obviously have taken action as well. I think the global economy, whilst robust, is now starting to show signs of rolling over a little bit. And that is, I think, going to lead to central banks being able to loosen the monetary conditions and start to reverse some of the rate increases that we've seen over the past 12 to 18 months. But I do think that that's a Q4 phenomenon. And for for the Fed in particular, the market has been pricing in the potential to reduce rates as early as June. There was, whilst a low probability, there were some practitioners actually pricing that in. I think that is too aggressive. I think that if anything is going to happen, it is going to be very much the back end of this year and more likely early into 2024.